Welcome back, insiders. Boy, do we have a lot to talk about in today's video, so let's get right into it. If you are looking to buy, sell, if you got those nice community shares, or short Reddit at its IPO, this is the video for you. So first of all, guys, let's mark the date. Thursday, March 21st, it will IPO on the New York Stock Exchange under the ticker symbol RDDT. We got that information right here as well. We'll talk about that in a second. Typically, IPOs launch around 10 a.m. Eastern Standard Time, so you can keep an eye out for that. Today is the 19th on a Tuesday, so we got 2 more days until Thursday IPO. Again, we don't know the time, but usually the IPOs happen around 10 a.m. Eastern Standard Time. Here's what we're going to be discussing in this video. We will be discussing Reddit's own WallStreetBets community does not like the IPO. They're actually super short on it, but why? So we're going to be talking about that and why it is a risk factor for the IPO. They even listed it on the S1. We're going to be talking about findings from the IPO filing, which is the SEC Form S1. You can see it at sec.gov. I'll share some of my quick highlights about it with you guys. We're going to be talking about 2023 big IPOs and how they are doing. So there's 4 I want to cover specifically, and so we have a little bit of comparatives, and we're going to be talking about number 4, what the All-In podcast thinks about the IPO, which is basically a podcast with 4 billionaires that talk about everything from investing, SaaS, tech, politics, and everything in between. They talked about it, I think, 2 weeks ago, so I'm going to give a quick little summary of what they think, and I'll also be sharing my unprofessional price target for those of you guys who are interested. Now let's get started here, and without further ado, I do want to highlight this one thing. RDDT Reddit, they are looking to offer $715 million. Now, this always changes because they want to ideally get oversubscribed, which basically means more people are interested in buying the company than they initially planned, so they can raise more money. I've seen numbers from 750 to 765, all sorts of random numbers, and this number does update from time to time. They are selling 22 million shares. This is a bit more of a fixed number, and this is that price they are looking for. Now, the subreddit of WallStreetBets is about 15 million users, and somewhere there was a vote. I can't find it right now, but they voted against it. They're voting to short it. Now, this is not like a professional or serious vote. It's just on the subreddit itself. But here's someone who shared that, how he could actually, or he or she, this user was able to buy some shares ahead of time. Directed share program, share range, 1 to 1,000 shares, that's quantity, the price, and then submission deadline. So right now the deadline is over, at least based on this directed share program. So a little note there. Now, the issues the subreddit was lacking that I was able to find is, first of all, lack of profitability, which we'll talk about in the S1 filing, and competitive issues, which we'll also talk about in the S1 filing. Volunteer mods, there's also other issues. Volunteer mods early buying program, they weren't so excited about that. Big employee stock sales, so there's a lot of employees that are looking probably to dump their shares. And then the AI ambitions, which we'll talk about as well. Reddit, the community is like super mixed on that one, but so far it's more negative from everything that I'm finding. And it's so bad, actually, that I found this post, and in the S1 filing, I saw it as well. Reddit lists WallStreetBets as a risk factor for its IPO. They're talking about that here on CNBC, which is really funny. On S1s, you can always see risk factors, what the company thinks is, dangerous. For example, they listed that Google and I think it was Azure, Windows Azure, if their servers crash, right, that would be really bad for Reddit, which makes sense. But they list all sorts of risk factors. And one of those was the fact that WallStreetBets is against this IPO, which is kind of funny. Now here's the extra risk, right? 8% of the float is going to Redditors. So active community members, mods, and so on and so forth. These are not locked up shares. So they can, if they got these prices that we saw here a second ago, between $31 and $34, they could just sell it right away on the IPO price. And if 8% of the float just looks to sell, that would be kind of dangerous. So that could create a little bit of a short session. Now, we actually saw something similar happen to Robinhood, which allowed its retail buyers to do the same exact thing. Look at this. This is pretty crazy. Robinhood will give investors access to IPO shares. This is back from 2021 in May. Now, you might remember this on Robinhood app. You were able to buy shares before the IPO price. And that did not help Robinhood's stock. It was a big discussion, and it was a hot topic at the time, I remember. And for the first, I would say that the second 2 days, the price of Robinhood did go down. But I wouldn't necessarily say that it was super bad. The price did rebound. More interesting is what you guys are going to see in a second on the other 4 IPOs that I want to discuss with you guys. But first, before we do that, this is the SEC filing right here that I was digging through. It is massive, super, super long. And I would highly recommend just to scroll through it and see what you can get from it. They have some interesting stuff that maybe some of you guys know about already. User-created communities are from only 2008, by the way. And then 2023 here, Taylor Swift hits 1 million subscribers. So some kind of interesting stats that you can get out of it. And then once you go lower, this is where the fun stuff happens, like the risk factors where they talk about their own community. Now, I cut a few things out here because it's a lot. It's a lot to digest. So here's some of the highlights. And this is one of the biggest points that I'm a little bit nervous about. And this is also what the community was talking about in terms of competitive issues. Now, ARPU is average revenue per user. I hope I'm not butchering that, but I looked it up earlier. Average revenue per user. It's a term that gets thrown around quite a lot in the SaaS space, especially with social media. Now, $3.42 per user I don't know if that sounds great or not to you, but here it is. Here's a comparison. Average revenue per user, social media apps worldwide 2022. Facebook is at 40. Reddit in this observation is at 0.81 in this study. So kind of different there. I'm not totally sure why it's such a different amount. You'll see in when was this? This is for 2022. They had 81 cents. And in 2022, let's just say, I don't know, one of these numbers, around 2.5 to 2.9. So a little bit different there. But still, there is a major difference between Facebook, Twitter, and Instagram. Twitter here and Instagram between $20 and $25. You got Snapchat on the lower, kind of mid-range, mid at $12, LinkedIn at $14, and TikTok at $3, which kind of makes sense. You have to think about the demographics of users, right? TikTok, you have a lot of Gen X, I think it is, very young people that might not have so much purchase power, while on Facebook you got millennials, you got boomers, people with more purchasing power. So that's kind of how it goes. Instagram, it's just, if you're a user on not Instagram, on LinkedIn, you don't really go there to buy stuff, so it feels a little bit different. The ads, you're kind of getting ads like company or hey, book this job or maybe create a job, so it's a little bit different there. But TikTok and WhatsApp seem to be closest to Reddit. So you could take this in two ways. Maybe the Reddit user is just not that valuable for whatever reason, or Reddit might have a lot of upside potential. I'm not really sure. I'll let you guys debate that in the comments. There wasn't really great reasoning for it in the S1 filing. So I'm a little bit nervous there for sure. Not to mention 98% of the revenue on Reddit comes from these media ads. So they need to get this number up, and if they get it up, it could be really good for Reddit. Scrolling down, you'll see United States versus the rest of the world. And US user is currently more valuable when it comes to advertisement, but rest of the world is, that could be anything from lower cost China and India to maybe Europe, which is maybe on par with the United States, if not more, who knows. And then if we come down to revenue, this is a big problem here. The revenue just isn't that great, I would say, but the fact that they're just net income, so it's a cash flow negative business, is what has me worried the most. You can see here, Reddit quarterly revenues, free cash flow, at the end is always red. So that's not too exciting. There is good news though, and this is a little bit of a argument between Redditors specifically, but Reddit cashes in on AI gold, 203 million in learning language models. So Google got a licensing deal to all AI content. So Google's going to be training its AI, I think it's Gemini now, it was barred, on their data, which is a huge amount of money. So I think that's a great license deal for Reddit, and hopefully they probably do more of that if you are long Reddit. Seems like a good thing. Now, I think a little bit of the problem that has people on edge as well is the fact that the growth on Reddit randomly increased in the last 2 quarters quite a bit. But there wasn't really good evidence on that in the S1. So the question is, is this valuation based on this huge new growth here or not? Because typically they're around 5 to 7% in growth. So that's a tough one. If their if their user growth goes back to normal, I think that could be really bad for the Reddit, because right now, 20% growth year over year sounds really great, but typically it is closer to 5%. But hey, 73 million active users daily is not bad. I mean, that's like 20% of America if it was just purely America. So that's pretty wild. Here it shows you United States is at 36%, rest of the world very close at 36, or it's 36 million. So it's basically half United States and rest of the world. So let's talk about the other tickers that IPO'd in 2023, some big ones. We got ARM, KYVO, Burke, and CART. Maybe you guys can already figure out which companies those are, but ARM Holdings Semiconductor, is one of the 2 tickers that increased in price or is over the IPO price. The other 2 are below it. So there's 2 above, 2 below it, but all 4 dipped below the IPO price initially. So you'll see here with ARM, it IPO'd right around $56, and then for the next few weeks, even months, went below IPO price. Before it rallied up. Big semiconductor. No big surprise there, just because on the industry alone. We had Klaviyo as well, software infrastructure company. They IPO'd somewhere in this area at like 36 or so, and they sold off quite a bit. They're still below IPO price. We had Birkenstocks, BIRK. They sold off at the IPO from 41 down all the way to 36 roughly, and now they're above IPO price with good earnings coming out. And it is a little bit on a backside here, but I think could be a good company to own. And then CART, that's a whole different video. And then Instacart, which is company Maple Bear. So Instacart, interesting situation as well. They were super oversubscribed, sold off for several months, and now they're trying to crawl back above the IPO price. But this was a really tough one for sure. And what I'm nervous about is the fact that all of these IPOs went below IPO price. And the fact that, even Robinhood went below IPO price, and they had the same situation where they sold to retail early on to get into that IPO. So I'm just a little bit nervous. I feel like it might happen again. And if it doesn't, it would be very unlikely, right? You would almost bet against that from not happening. So that's something to consider. The last thing about the big IPOs going on in 2023 is the fact that IPO market has been really slow. In 2019, 50 billion, and then 2021, after COVID, 155 billion. But once all that COVID funding just dried right up, we had 8.6 billion IPO market in the US, and then it slowly increased to 22.6 billion. 2024 is looking to be even better. So I guess it's a good thing that Reddit didn't IPO in 2022 and 2023. No surprise they pushed back their IPO. So we'll see. It's not the best IPO market still though. Now, in terms of YouTube and the All In podcast, what they think about Reddit, they are nervous, and they talked about it in 2 weeks ago. Let's see here. Yeah, roughly 2 weeks ago. It was like a 15-minute segment you guys can check out if you guys want. They also talked a lot about the history, or the last time it went IPO'd, and a lot of the funding. Sachs breaks that down really well. But some of the main concerns is the ARPU that we talked about being super low comparative to the other companies, like the other social medias like Facebook and Twitter. So they're really nervous about that. They're also really nervous about the fact that the growth randomly spiked without good reasoning, and they don't know if it can hold, and they think the valuation might be oversubscribed because of that. But they didn't dive down specifically to say, we think it's good at this price or anything like that. But all of them were quite cautious, and they all seem to have a lot of questions about, is this going to continue? Is the boom random? Because right now the growth for it, like we talked about earlier, 27% is much higher. They're talking about going through some things on the S1 as well. So definitely worth a watch. A little bit bearish there as well. Now, in terms of what I'm thinking about this ticker, I'm a little nervous because August 2021, Reddit actually did a valuation, had a valuation at 10 billion. They did a funding round. They plan to raise, or they raised 700 million in fundraising led by Fidelity. So they are at a huge down round right now. Even if they get that big multiple of 6.5 billion revenue that they're looking for, which is a 5 to 7 multiple based on their current revenue, which isn't too bad. But even if they get that huge billion valuation, they're already half of what they used to be. And I wouldn't be surprised if it went even lower, because if we break this down a little bit, right now they're trying to sell 22 million shares at 31. Let me zoom in a little bit more here. At 31 or $35. So that would be how much they're looking to raise there. You saw it earlier on my TD website that, you know, they're looking for 715. So we'll see what kind of how many people are going to get shares out, and we'll see what they're going to actually IPO at. But that's how much they're looking to raise. And if we just come down here a little bit, and again, 8% of that is going to the Reddit community, who are going to be able to sell right away. So the very low end of that would be only a $5 billion valuation, which is like a perfect haircut. And that's already very low, and it's already an oversubscribed IPO. So they're getting much more interest, and the price keeps getting up. So most likely you're probably getting filled at like $35 right now pre-IPO, which puts them about a 5.5 billion valuation. And they're looking for around a 6.5 right now, which is a $41 stock price, which I wouldn't be surprised if it IPO'd somewhere around 41 or something like that, because that's where the interest is being gauged right now. If you do any searches for Reddit, that's the number they're talking about, 6.5 billion. What I'm worried about is that recent valuation here at 10 billion that happened 2 years ago, even though there's been some growth. My price target, honestly, is $22. Just kidding. That was my lacrosse number. My real probably valuation is anything sub 30. I think that's where it could get a little bit interesting, which basically I would like to see maybe something around 25. So if we get a sell-off, right, because this would be like a 60% sell-off from former valuation. So if we had a chart and it was at 10 billion market cap, now we just went down 60%. And that's what we've been seeing with a lot of tech companies in the last 1-2 years, or actually like 3 years ago. And then there's been a big rally like Facebook. So I would like to see that come down even more. But if I see anything in the 20s, like mid 20s, low 20s, I would probably start some sort of DCA and accumulating this ticker. I just don't really want to be buying it over 40. I think if I saw anything over 40, I would be selling. And if I see anything mid to low 20s, I would be buying with the intent of holding for multiple years. I don't see Reddit going away anytime soon. So below 30, consider to start DCAing in. Above 40, probably consider selling. Regardless what happens on Thursday, you guys know where you'll find me. I'll be in the Discord, and we'll be watching this ticker for sure. I don't think I'm going to be investing in it right away unless I see that dip below $25, but I might be day trading it, so that is totally different. If you guys want to see what I'm up to, you can always just go to my profile page, /Winkler, tradejournal.co/Winkler, and you can get all the updates on my latest trades. Thanks for tuning in, everyone, and dropping that like. Let me know what your price target is on Reddit in the comments below. I'll see you next time.